Hi, I'm Rob Van Raphorst. Welcome to MBANow. One of the biggest challenges the real estate finance industry faces today is the need to reform the secondary mortgage market. Pete Mills, MBA's Senior Vice President of Residential Policy and Member Engagement, is here to talk about MBA's GSE reform plan and how it treats lenders of all sizes equally. Pete, thanks for being here.
Thanks for having me, Rob.
Pete, the Senate Banking Committee recently held a hearing on GSE reform, specifically dealing with small lenders' issues. Can you speak about how MBA's plan addresses those issues?
Of course. I mean, first, the good news is that the debate this year is starting with the principle that small lender access needs to be protected. If you go back to 2013, with Johnson Crapo and Corker Warner, small lender issues were an afterthought. This year, and I think this is a product of some of the work we've been doing in the interim on our transition plan, but also with our GSE task force plan itself, we spent a tremendous amount of time working on the small lender issues, making sure that we built in protections into the reformed system that would address the concerns that small lenders have, protect access to the secondary market, and preserve a level playing field.
So more specifically, how does MBA's plan protect small lenders?
First and foremost, we set up what we call a utility-style regulator. So we give the FHFA or a new regulator, whichever it would be, additional powers that FHFA doesn't currently have today. And as part of their regulatory mandate, what in utility-style regulation we call a regulatory compact, the regulator would be required to ensure that the guarantors maintain that level playing field. That is part of the regulator's mandate.
So what's next for MBA and promoting our plan?
Well, specifically, there are some specific reforms we're going to continue to talk about. Level pricing across all lenders, regardless of size or asset size or volume of loans sold. That's a key tenet. Second issue, preserving a cash window, making sure that small lenders have access to all the programs that are available, preserving servicing release, servicing retained options, key piece of this. When it comes to credit risk transfers, we need to make sure that they're accessible to lenders of all sizes and that they don't serve to unlevel the playing field from a guarantee fee standpoint. And then one of the other key ones is the issue of vertical integration. And so our proposal specifically puts strict limits on the ability of a lender to own a controlling interest in a guarantor. So some of those are some of the key protections we're going to educate the Senate on as this debate moves forward. And I want to work together with our allies in the industry. I think there's a tremendous amount of alignment on a lot of these issues. Where there are differences of degree, not of the core principles. So we think that's a good platform to move forward and begin the debate on GSE reform and end up with a framework that protects small lenders and makes sure that we don't re-aggregate the market to just a handful of gigantic lenders.
GSE reform really is a big issue both inside our membership and in the industry, so we really appreciate you coming by and talking about it.
I totally agree. Hope our members stay in tune with what we're doing, and look forward to speaking with you again at a future date as the issue progresses.
Great, thanks. Be sure to follow us on Twitter at MBA Mortgage and like Mortgage Bankers Association on Facebook and Instagram.